Hello, welcome to European Open Briefing for Tuesday, November the 27th. I'm Rafa Berjan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing a sharp reversal of yesterday's positive start to the week. So risk sentiment deteriorated after President Trump told Wall Street Journal in an interview that it's highly unlikely that he would prevent the tariffs on 200 billion worth of Chinese imports automatically rising from 10% to 25% on 1st of January. So that has dashed expectations that we're going to see any significant progress between talks between President Trump and President Xi at the G20 summit at the end of the week. So this has led to safety flows and the dollar being the main beneficiary. Dollar index rising close to its 17 months highs at 97.20 at the moment. Dollar yen, the Japanese yen also seeing safe haven flows. So dollar yen struggling a little bit at around 113.58 at the moment. We're seeing both the euro and the pound coming under pressure against the US dollar. The euro is being weighed by more poor data out of the Eurozone, dovish ECB remarks, as well as doubts about how far Italy is willing to go in order to reach a deal with the European Commission over its budget plans. Sterling is under pressure as Theresa May is looking highly unlikely to get Parliament's backing to pass her Brexit deal. And in commodities, oil prices have turned lower again. WTI falling below the $51 a barrel level. This is weighing on commodity-linked currencies, though at the moment the Aussie and the Kiwi are marginally higher from yesterday's close. The loonie, though, is weaker due to that fresh drop in oil prices. If we have a look at equities, it's a bit of a mixed bag at the moment. The main gainers this morning are the Aussie and the Kiwi, though they're up only marginally, and we can see pound struggling, one of the worst performers this morning. So having a closer look at the major pairs now. So those comments by Trump has really hit risk appetite. The immediate focus, though, will be on Feds, because we're going to have a number of them making appearances later today. The main one, though, will be Vice Chairman Richard Claridas's speech at 13:30 GMT. It's quite possible that following his last remarks, he may sound once again a little bit more cautious about the future outlook, and that could lead to some dollar weakness. Looking at the euro, we can see it's struggling at the moment to hold to the 1.13 level. We had German IFO Business Climate Index yesterday coming in below expectations. There's also conflicting signals out of Italy as to whether or not they are willing to make compromises to the budget deficit for 2019. Some say they're willing to reduce it to 2.2%. Others say that they're going to stick to their targets. We also had ECB Chief Mario Draghi as well as Chief Economist Peter Praet speaking yesterday. Both, although they did say that they are unlikely to change course in monetary policy, that recent data has been weaker than expected. So a little bit slightly more dovish remarks coming from the ECB lately. Looking at sterling, we can see the pound dropping below the 1.28 level. President Trump has waded into the Brexit deal debate. He did say that if you look at a deal, they may not be able to trade with us. So that's a bit of a thumbs down to Theresa May's Brexit deal, and that gives further case to the Brexiteers within the Conservative Party, who say that Prime Minister May has conceded too much power to the European Union, and this even reduces further her chances of passing that deal through Parliament. And a quick look at commodities, we can see oil prices saw a brief recovery yesterday. They've slipped back down again. Although Saudi Arabia has signaled that it is willing to cut output, some reports say that Saudi Arabian output in November did hit a record high. So coming from those November highs, even if we do see a substantial cut out of Saudi Arabia, it could still lead to significant supply glut in the market. If you look at the Australian dollar now, the good barometer for risk appetite, we can see there was a brief spike earlier today. There was some reports saying that China is saying that Trump and Xi have agreed to reach a mutually beneficial trade deal, but then they later said that they were actually referring to an earlier conversation between Trump and Xi. So we saw those gains being quickly pared back again. The main focus for the Aussie will be third quarter construction data due early tomorrow. That's it from me. Thank you very much for watching and have a great day.